What's going on, everybody? Good morning. Great morning. So happy to be here with you all as we get going here today. We got a lot to talk about. The markets are going crazy. There's a lot going on across all markets. Once again, it's time for us to really take a solid look. We have a lot of charts to look at today, right? This was the Bloomberg Dollar Index. It's calculated different than the DXY. Nevertheless, yesterday, both of them were into resistance. Here, the Bloomberg Dollar Index coming right into the resistance, and the DXY, you can see that we pierced it. Let me come down to a short time frame. A lot of people like hanging out in those low time. You can see that we pierced above it on the 8-hour. This is where we make our living. We closed above it. A solid close above the neckline, and then we came in for the retest. And what happened? We never resumed off, conquering the markets all day long, keeping ourselves on the right side of the market on all time frames. And you can see that right now. What happened overnight, by the way? What could have caused the dollar to come off a little bit? This morning we had, what do we have? We have producer prices through the roof again. Are those going to be passed on to the consumer, or the company's going to take the losses? What's going to happen? Are we going to see rising prices continue? Is the inflation transitory? We saw it last night, the infrastructure package passed. Is that weighing on the dollar this morning? Yields are down significantly after being up significantly yesterday. We're playing a bit of yo-yo right now. This session is going to be very important. We'll talk about yields in 1 second. That's the dollar, right? Right now, we're seeing the market pricing in a rate hike at the end of 2022. Now, the Fed's dot plots from the last meeting have that at the beginning of 2023. Either way, is that signal or noise? I mean, whatever. That's quite a year and a half in the distance, right? Right now, we continue to have that uber easy monetary policy. We're going to see what happens, right? When I say we're going to see what happens, I said what conquering the markets has been focused in on for the longest time, over a year and a half ago, was signal. Signal for us was the continued expansion of not only the Federal Reserve, but the central bank's balance sheets. And it was also the increased stimulus we were going to see from the government. The U.S. government has over-delivered and continues to over-deliver, right? Is the market going to have to actually start raising rates sooner than later? I don't know, but it's not anytime soon. Nevertheless, we're keeping track of it all. We are looking at the S&P technology divided by sales ratio. We are as oversold in tech as we were during the dot-com peak of the dot-com bubble. We are getting to lofty levels. Now, it's all like crazy fake. Yeah, what do I mean by that? I mean, the stock market, in my opinion, continues to mirror the liquidity of the markets, of the global liquidity. Now, could that change, and could it change drastically and quickly? Yes, it can. We have to watch out. The markets are not crashing, but we have to watch and wait for the next time they do. You can't get compliant. You always have to be watching what's going on, because when that global liquidity, even though it's rising and rising, when it comes in hard and fast. We will be watching. But right now, as we look at the S&P 500, I mean, technically, uber bullish. Let me look at it at the daily. That's all uber bullish. By the way, breakout, retest, perfect retest of the broken resistance as support, resuming up. And there's a lot of room to the upside. A lot of room to the upside. Downside, it gets very easy. Breaking this trend line over here, that would be really worrisome. That's a tradable event into this line of support. Below that, it could be lights out. We'll watch it. The Nasdaq also looks super nice over here, but I mean, the trajectory is quite steep, right? If we ever start getting that real steep, like over here, this happened and we were watching it as it occurred. Go back to last summer in August. By the way, it was about a month earlier. It was a month earlier, excuse me, where I said, listen, at this point, the equity markets are risky. I'm out, right? And I missed a melt up move. That's a big move to miss. Now, it came back down just as quickly, and I did the right thing by being on the sidelines at that point. But, we have to watch not only for the breakdown, but if we get some type of sellable event. A sellable event would be like people who are taking the last repair that we did on this channel together, people that are taking the repair. Then we talked about, the channel and the break. people who are watching this trend line to hold on to their trade. An exit is not only to the downside, an exit could be if you get some price action that starts screaming to the upside as well. Silver this morning looks very interesting. I had it golded last night to watch what was happening over here. Let me jump down to the 8-hour we're breaking it right now. Let me go ahead and draw a trend line over here. Silver is hot right now, right? Silver, by the way, it's not only breaking this line of repair. The last time it broke a line of repair was over. Good morning, everyone. Great morning, CTM. So happy to be sharing this journey with all of you. The last time we looked at silver was back in over here towards the end of April, and we had two entries that we looked at as we had the breakout, and then and I called that an anomaly. I'm taking the breakout over here, and then we had the retest giving a second entry, and then our exit. Our exit was over here at the end of June. That's as far as we could push it, right? But look what happened. We have this horizontal resistance coming in at $26. $26.35. We're breaking above it right now, the horizontal resistance, and we're breaking outside the trend line. Now, at this point, this was a long consolidation, and I took the move out. At this particular time, I'm reverting back to like old school, breakout, retest, resumption. If this closes above the trend line, at that point, this goes from gold to red, or green, I should say, green light, go, waiting for that possible entry into silver. It looks good. What about gold over here? Gold still got a little while. But by the way, notable to be clearing above the resistance we had over here at 1817. And now coming in, I believe it's too soon. I'm not going to take the entry on silver I like. And just because I like it doesn't mean that you should take it. And if you take it, you have to take responsibility for what you're doing and how you're doing it, which means that the first thing that you do before anything else is understand and know where you're exiting the trade if you're wrong. You know where your stop loss is, and depending on where your stop loss is, that's how you're setting the position side for your trade anyway. It's a nice risk reward if you're using either the last swing low or the low of the move below it, into just the resistance. It's a trade that, if you take enough of them all year long, and most importantly, as soon as the trade goes into profit, you don't steal that profit. You don't take that profit. You don't cut your winner short, but you look to push that trade, right? Over here, we tried to push the trade. We only got $2 out of it. That's all the market gave us, but we had the mindset and we wanted to see us break out to 12-month highs and then perhaps start running. Listen, it's manipulated. You have to ask yourself, how is it or why is it that the Federal Reserve expanded their balance sheet by $4.1 trillion and gold really hasn't done anything, in relation to other assets? You have to ask yourself that. Now, during the crisis, gold did act very strong, by the way. During the March 2020 crisis, the dollar liquidity crisis, gold only came off 15%. That was notable. That's pretty good during a liquidity crisis. During the 2008 crisis, gold came off 30%, right? That's notable, but at the same time, since, gold continues to lag. It's heavily manipulated. They have to manipulate it. And at any point we see a strong repricing in gold, I do believe that's going to be because of a sit down and a new monetary system is set forth. That's like Russia sits down at the table. They're like, we got a bunch of gold. The ECB, they're going to confiscate Italy's gold, or they already have, and they're going to be like, we're sitting down at the table, right? Germany's got a bunch of gold. They not only have a bunch of gold, they've took it back to their shores. They're like, all right, the New York Fed, we don't trust you. We'll hold on to that. Thank you very much. China continues. Boom, boom, boom. Not only do they stack gold and import that stuff, all the gold mined in China is bought by the Chinese government. They do not allow it to leave their shores, right? There's a bullish case for gold, but the timing is everything. All right. What else is going on? The markets are a little bit crazy, that's for sure. We got a couple other charts to look at. This is Bitcoin, and it's ready to go. Now, which way is it going to go? It could go obviously one of two ways. This is not rocket scientists. You don't need to be a nuclear scientist to understand that price is consolidating and getting ready to break out, right? But you do need to be a trader. You do need to be astute. You do need to have common sense, and you do need to have some street smarts. But what we're seeing over here is Bitcoin consolidating down. The bears tried to take a whack at it overnight. Bitcoin traded off 3% during the Asian Open, right? It's off those lows, barely, a little bit, a couple of percent off those lows, right? Was that the time to attack? If you clone this line in your mind and then you bring it down over here, you could see that it's a channel, right? And we came back down. We traded as low as around, let's call it $31,700 in that neighborhood over there. And you can see the downward slope and the symmetry continues. We could break down quite easily. We could take out the support around 30,000 and then trade lower. Now, there a significant amount of people out there, not everyone. I did a litmus test yesterday to kind of see where everyone's at, right? There's a significant amount of people who feel like, they're getting their fill at whatever price it may be. Now, whether that's like 29,000 or lower, 20,000, so a lot of people are pretty confident about. The risk right now is to the upside, right? Even if we go as low as $20,000, is that probable? I don't know about that. Is that probable? I don't know about that. Is it possible? Yeah, anything's possible. It's the markets, right? Anything's possible. It could go to the, it's the markets. But the risk, when I say the risk is to the upside, does that mean that I'm calling for a breakout over here right now? Absolutely not. Let's take a look at the chart, right? Bitcoin turned positive now on the session. That's nice. Ethereum is leading the way right now, up 2%. Ethereum, by the way, before I even talk about Bitcoin, you could see that it was getting quite scary, right? It broke out, and it broke out hard over here. We covered that breakout on Ethereum. Let's take a look at it in real time as it occurred right over here, right? And then we had this strong, do you remember that? The signal, basically we're like an archer who has their, I don't know what it's called. I'm not an archer, but when you have your bow flexed back and you're waiting, right? Instead of just firing off arrows, we really we wait for the kill shot. We wait for the kill shot. We wait for the kill shot. And then when that kill shot is there, we line it up. And then we let that arrow fly. When we call out the kill shots, pay attention. This was the last time we called out a kill shot over here. And by the way, the video that we put out over here, I showed it to you once. You could go back and look at it. It's around this over here in April. I'm sorry. It's over here in May. And I say within 1 week, we could look at the top of the Ethereum move. Within 1 week. It was 5 days later or 4 days later. Nevertheless, this looks scary as price has retraced all of this. Doesn't this look scary to you? And when I say look scary, there are people out there. If I didn't understand the cryptocurrency markets, and I was looking at a chart, and I was looking at this chart, there's no way I would be a buyer. I would be very scared that this is going to break down and crash down. And I understand when people look at a chart of Bitcoin and they're like, you know what? That's a nasty head and shoulders there. And if that breaks down, Bitcoin's going to zero. I get it. I do understand it. And that's why I think a lot of people who spent a lot of time in traditional markets and not have spent the time understanding the cryptocurrency markets, that they're really at a huge disadvantage. I really believe that. But that's a story for another day. Ethereum, it's tough here. It's looking tough. It's nice to see the bulls trying to defend over here and hold the line. If they could do it, it needs some time, in my opinion, to prove itself. It's not the time to be attacking. It's not the time to be attacking at all. Defending, perhaps. Defending the line right here. Okay, well that's what the participants are doing. When is the time to attack on Ethereum, by the way? Because you all know that I have that lined up quite well on Bitcoin when we break the most important trend line in Bitcoin, in cryptocurrency, in the most important trend line in crypto, then we have momentum returning. And then I'm going to be trading once again, as I traded when the Bitcoin bull market broke out, right? and then September all the way to the middle of May, right? When I have that momentum, I will be trading, increasing my stack. You have a lot of people. You have a lot of people. By the way, I'm so sorry. If you're watching, if you're here with us today, we got 900 people here watching live. Another few thousand watching this on the replay. Could you go ahead and support the work that we do here and smash that like button? We have 200 likes so far. I think we're a little light. Everyone's got to help out, and I'm asking you right now to go ahead, Trey, and smash that like button. It helps get me fired up, and it helps other people see the work that we do over here, and you know what, in my humble opinion, it's extremely valuable. It sincerely is. All right, so listen, right now a lot of people are trying to make a lot of noise, right? And people are trading this range on Bitcoin, and it's a very tight range, and it's been going on for a long time, right? For 2 months. Is that 2 months, or is that 2 months now? People are trading this range. Even worse, and I pointed this out to a lot of people, when I say even worse, I mean you have a lot of people trading this range. This $2,000 range over here, people are really, really like, I don't understand why. I sent out the tweet trying to get people just to see it a little bit clearer, trying to protect them. But ultimately, you make your own decisions. And when you're seeing, if you clone that line in your mind and you put it down over here, that's exactly what I have here in yellow. Is that a place for you to be trading, scalping a $2,000 move in Bitcoin? Obviously and clearly not. If you want to trade and trade early, then wait for the breakout, or the breakdown. But don't be trading in that little range. And when I talk about risk being to the upside, right? Even if Bitcoin trades down to that $29,000 and you get your fill, right? If you're seeing or you understand that Bitcoin, at first is going to be trading $500,000, overtaking the market cap of gold, it's not. Does it stop there? Going towards $1 million, gaining a greater share of that monetary supply, those trillions of dollars out there. By the way, Bitcoin is only a $10 trillion market as it overtakes the market cap of gold. Does it stop there? Is the use case for Bitcoin as good as gold or better, right? What's happening to that fiat money? It's getting devalued, and this is the chart of the day. Jim sent this over, and this is the chart of the day over here. You're looking at the Fed's balance sheet. Notice you're not looking at, by the way, the G10's balance sheet. Notice you're not looking at like China's balance sheet, the ECB's balance sheet, the Bank of Japan's balance sheet, and the US's balance sheet. I shouldn't even see the US, the Federal Reserve's balance sheet. You're just looking at the Federal Reserve balance sheet here. Here in pink, you're looking at the Bitcoin supply's annual change, and you're seeing how Bitcoin is inversely correlated to that, to the upside. So if you're looking at, if you're trying to time the market here, trying to pick up some Bitcoins at $29,000, understanding that it's going to $1 million, not financial advice, do your own research, do your own due diligence, run the numbers, right? And figure out where you're at and where you're going. The risk, my friends, is to the upside. The risk is to the upside. A lot of people think that there's a lot of time, that they have time. Things are unfolding quickly, though. What happened? What are we looking at? Altogether, it's a 4 something trillion dollar stimulus package for infrastructure. It's $3.4 trillion plus the $600 billion bipartisan blah, 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 blah. You're talking $4 trillion. They're spending money that we don't have, and they're spending it like crazy, but they're not even building out infrastructure, right? The money's going towards climate change. The money's going towards daycare. The roads, the bridges, they're falling apart. You ever try to use internet in the US? Come on. Infrastructure is one thing. Borrowing money from your children's future and spending it recklessly is another. The purchasing power continues to be devalued. That's signal. Bitcoin continues to be that black. Bitcoin is a brand new asset, by the way. A brand new asset. It's a little baby. $600 billion. It's a little diminishing returns, right? It's a little baby. It's 600. Yeah, it reached $1 trillion barely and then backed off, $600 billion. There's a lot of money out there to compete for, a lot of capital, right? We'll talk about that and want to jump over to it. Jordan, how could you have diminishing returns so early in an adoption and having events? People are irrational. Yeah, people tell you diminishing returns. The law of diminishing returns states that, but what does that mean? And where are we in the cycle? I've showed you where we are in the cycle. By the way, fiat hedge over here is very good over here. Diminishing returns, lengthening cycles, it applies. Yes, it does. When the adoption curve stabilized, not in the exponential phase of adoption. Where are we in the phase of adoption? I try to show you early. I try to show you often and often enough. And I talked about this in 2019 with you. In 2019, when I laid out the bullish case for Bitcoin, this is exactly what I was comparing the adoption of Bitcoin to as the adoption of the internet. And then where are we 2 years later? Right on schedule? Nope, we're not right on schedule. Actually, this is increasing a little bit faster than the internet. Well, that's something, don't you think? Yep, that's pretty notable right there that we are now actually increasing faster than the adoption of the internet. When does this curve begin flattening out? Are we still in the early adoption phase? Do we have 1 billion users in crypto yet? Nope, we certainly do not. We're almost halfway there. What do we have? 600 billion users? We are growing exponentially. And yes, maybe in the next halving cycle, but it will be a 2025 bull run, right? And we are still at that point, still growing exponentially. So probably in that cycle, we don't have diminishing returns either, although it's possible. It's quite possible. It's even possible that this cycle we have diminishing returns, but it looks like, if you're weighing it out, that the possibility or more probable possibility than diminishing returns would be a lengthening cycle with increasing returns. But again, is it possible that the next cycle we see some type of diminishing return? It's possible, but probably we see increasing returns. It depends probably what's going on at that particular point. Is 4 years from now, has the central banks and governments of the world gotten their houses in order, and have we escaped the latest crisis, and are things looking a lot better? Has that negative yielding debt disappeared? Is now all of a sudden, does it make sense to be a saver, right? Is that purchasing power of your fiat increasing? Do you feel good, or are you looking for an escape hatch, and are more and more people aware of that escape hatch? Or what's going on in this area between the central banks and their CBDCs and what's happening? We don't know what's happening, which is why we do each and every day. But we're putting things into perspective. Yeah, for sure, as the curve flattens out, at that point, we're looking at diminishing returns. There's no question about that, But I mean, listen, that could be a decade away. That could be 2 halving cycles away. Hold on, let's focus on what's happening in front of us. Fiat hedge, good conversation, right? He's saying when miners are least incentivized to mine with reliance on transaction fee, a decade away. A decade away. The model is conceptually flawed. I agree wholeheartedly. But I know how to run the numbers. I sincerely do know how to run the numbers. And this one I want to get into. The year of the bull. The year of the bull's conversation yesterday. Beautiful stuff. Before we do, let me step back for a second. Bitcoin unchanged on the days. I want to check in over here with Team O'Donnell, right? Jordan, this is very important. Everyone just pay attention really sharply. Forget commenting for a second and distracting yourself. This is going to take us a few minutes to run through, nothing more, but very important stuff over here. I think it's going to help a lot of people get centered and balanced, and that's very important. Jordan, Tom's been with us since forever. Jordan, I want to circle back with you on strategy and clear up any misunderstandings, if any. Team O'Donnell, Tom taking care of the family, is option number 1. Buy and hold without leverage. We're strong hands, early, and money ahead. We share your approach to sell at the bull run peak within 25% of the top tick and accumulate during the bear market low. And for the next cycle, repeat option 1 without leverage and hodl. 10-year plan. Two more halving cycles. 10-year plan. It's, by the way, let me just one more time just remind you, people overestimate what they could accomplish in 2 years and vastly underestimate what they could accomplish in 10. It's math plus code. It's math plus code. Programmable money. In the first quarter of 2021, Team O'Donnell all agreed to do nothing if we had a double pi cycle cross without the R hodl confirmation. It was also it was January, the first week of January, we talked about the possibility of a double wave. Tom took it further. He talked with the family and they said, listen, if we have a pi cycle cross, we are not exiting ahead of time. So they had that pre-planned. For me, it was different. For me, it was like, you know what? I don't see price moving towards a blow off top. For me, I'm not going to take that signal. But we did look at this together many times and say that, listen, for the top of the bull market cycle, we do look at the R hodl ratio, right? The 1 week divided by the 1 to 2 year float times market cap. And every time there's been a bull market peak, or this was the double wave in 2012 on the 2012 4-year cycle, the R hodl has been overbought. And that has not happened in this cycle so far, as we are mid-cycle. Tom making that very clear. We started the bull run with confidence in the pi cycle indicator. It was more important than the projected price target or the projected date. Fire stuff right there, Tom. I hope people are paying attention. We know it gave a false signal of the bull top without the R hodl confirmation. Now we're mid-bull run, and we had a mid-bull run cross. The pi cycle indicator is 4 for 4, calling mid-bull and bull tops. Chances are it'll be 5 for 5 at the end of this bull run, right? Team O'Donnell was like, listen, even if it crosses, we're not taking it. It crossed. It was accurate. We had a 50% drawdown. Granted, here's a 70% drawdown. Here's an 85% drawdown. Here's an 84% drawdown. That's 53% drawdown significant. They're saying, Tom's like, it's 4 for 4. I believe that during the cycle peak of this bull run, this pi cycle cross is going to be a huge tool that I want in my quiver, right? Chances are it'll be 5 for 5 at the end of this bull run. Now, I researched everything Philip Swift said, right? Philip Swift, I take it he's the creator of the pi cycle. And what else I could find on the pi cycle indicator. It looks like he walked back his comments with Willy Woo on his thoughts about the reliability of the indicator. Oh yeah, it worked out. Oh, well, I meant to say that it was good. The cycle modeling is amazing, but for me, it's statistically soft, and the ranges of target price and date projections are very wide and hard to trade. Let me repeat that one more time. Team O'Donnell, the cycle modeling is amazing, but for me, it's statistically soft, and the ranges of target price and date projections are very wide and hard to trade. All I use is the modeling to ask, are we still within the model range or not? And rough guides for targets or cycle highs and lows to help make the bullish case for Bitcoin. Today, I made a decision to put the pi cycle and R hodl indicators back on the table as the primary tool to call the top of this bull run. I'm confident it's the right thing to do. I could be wrong. I'm flexible. I'll be watching carefully. It takes pressure off the modeling for me. It's clarity and a position of strength, conquering the markets all day long. Tom, if at the bull peak, the pi cycle indicator is 5 for 5, that will be significant for next cycle. It could be a tradable event, but most likely I'll stick to option 1. Some beautiful stuff over there, Tom. Thank you for sharing with the community. Really grateful for that. We are looking at, since we got started here about 35 minutes ago, everything continued to maintain exactly as we were looking at it. Seeing silver pushing up outside the break of that trend line. Remember, you're waiting for a close above it. You're then waiting for a retest and a resumption out there. And in my opinion, on the 8-hour to do all of that. There he is, Tom, right there. Tom bringing the fire. Let's take a moment here to recognize. There you go, Tom. Beautiful stuff over there. Beautiful stuff. Good stuff. Amazing stuff. Thanks, Tom. Thank you, Tom. And then we're talking about, there's one other thing I want to talk about with you all here as we close up this beautiful session. Thank you for spending this time with me this Wednesday morning. This beautiful moment in time, conquering the markets. What a privilege and an honor to share with all of you. Iron sharpens iron. That's what Tom has over here. Hey, Tom, may I share this on the stream tomorrow? Of course. Iron sharpening iron, my friend. That's conquering the markets to the core. The year of the bull, misconfig. Man, are you following him on Twitter or what? Yesterday, taking a look at the chart that we so often have referenced, Charts BTC. Charts BTC instrumental going back into 2019, helping me see so clearly the 4-year cycle. And we've been watching this cycle, this current cycle. By the way, this is like by block count. It's way more of an advantage by following by block count over by many days. Why? Because the halving cycle is every 210,000 blocks. It's not every 4 years. We use 4 years because it's very easy to say the 4-year cycle. But it's obviously because of the halving event that occurs every 210,000 blocks. We're lining this up at the halving event here in red, lining up all the cycles. You can't look at past cycles because blah, 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 blah. But if you can't see how these past cycles are mirroring each other, right, and have mirrored each other, I think you're missing out. You know, one day will this break? Yes. Has that day come already? I don't know. I don't call bottoms. I don't call tops. You know, and I say that with the exception and asterisk. When it comes to Bitcoin, I certainly do call the bottom, and I certainly do call the top. We're looking at over here that price so far, right? As we line up when I make the observation I've been making for a long time, well over 6 months now, going back to sometime towards the end of November, early December, talking 7 months now, is that this cycle happens to be an average so far, anything could change, of the previous 2 cycles. That's what we've been looking at. And you could see lining it up to halving. Well, that's quite true. That's quite true. The volatility of the upside is not as great as the 2012 cycle, but it's more than the 2016 cycle. The drawdown to the downside, right, is greater than the 2016 cycle, but it's not as great as the 2012 cycle. And the amount of time price is consolidating is not as long as the 2012 cycle yet. Maybe it will be. But it's definitely longer than the 2016 cycle in every way, from every angle that you view this current cycle. It remains an average of the previous 2. Why? Monetary conditions, were they easier or harder in 2016? They were tighter, right? We have uber easy monetary conditions. By the way, the asset itself over here at this particular time in 2012 was very young. Very, very young. A little bit of money did a lot more damage than it does today. But today, people say, how could Bitcoin get to $100,000? How's that possible? Right? Today, you see companies stepping up to the plate with billion-dollar purchases. You see countries adopting Bitcoin as legal tender. Right? How soon until the first central bank announces that they have put Bitcoin on their balance sheet? Why? Because they want to, or because they have no choice? You know? It's a game of survival here. So what are we looking at over here is the probability that we see from this particular point mid-cycle that we see Bitcoin do nothing and trade sideways into 2023 and then come up high. You know, some people look at it like that. Is the probability that we see, by the way, the Fed's not looking to tighten to 2023, right? Or the market's pricing in late 2022. If you're following my approach over here, we continue to have this window over here of uber easy monetary conditions. Is it probable that price actually spikes up over here and continues averaging the past 2 cycles? That's my base case. That's what happens. Now, mind you, if it doesn't, and we see price come over here and still peak up, and we only reach $160,000 and we have diminishing returns, I'm prepared. And if that happens, at $140,000, I'm going to announce a mission accomplished, because I've set all my goals and targets that if that's what the price meets during this bull market phase, I've accomplished everything I set out before the cycle started. Now, I do notice, by the way, that there are a lot of experts in Bitcoin today. Now going back a year and a half ago, it was a different tune. But sprinkle on a bull market, everyone thinks they're an expert. People out there throwing out opinions freely. You have to consult those who have a history being correct. You have to consult those who have a history of being able, when they're proven wrong, to flip their perspective and make sure they get on the right side. It's the market. It's trading. You can't expect or even desire to be correct all the time or on the right side all the time. It's a question being able to make sure that you pivot and get on the right side when presented with the new data, right? But Year of the Bull is saying, wait a second. People are talking about, diminishing returns and lengthening cycles. And Jordan, they're even talking about, the repeating cycle, the 4-year cycle, right? But you know what? I don't know that any of those make sense. Actually, I think that these don't capture the current macro climate. The current macro climate does not really like diminishing returns. We looked at the adoption. That's not showing diminishing returns. We look at the monetary climate. Does that set up for diminishing returns? Or even, Jordan, are we going to see this repeating 4-year cycle, this repeating cycle? Or is actually the risk greatly to the upside right now? Is it much higher than anyone is perceiving? And what we're about to witness over here over the next 6 months, when the mania returns and the FOMO kicks in, right? We have a bunch of people, set up, who have already, created wallets on Bitcoin. Some of them have taken those wallets offline, but those accounts are still created. Retail, by the way, which caused the past cycle FOMO, is not going to be causing the FOMO of this current cycle. We are talking about whether it's sovereign nations, whether it's public companies, or enormous funds and or pension funds, or it could even be the release of the approval of an ETF inside the US. Could you imagine the flood of money that will be coming in there? Either way, it looks like right now the risk is to the upside. We look at the macro environment. We see this morning not consumer prices, producer prices skyrocketing. That's got to be passed on to the consumer. They're saying there's no inflation here, but prices keep rising. We had the hottest CPI print in forever this past week. Jerome Powell testifying today. What's he going to say? Is he going to say it's transitory? Is he going to be hawkish and be like, you know what? The inflation is real. We need to raise rates. Or is he going to be like, it's transitory. Don't worry. We're just going to keep on printing. Keep on printing. Keep on printing. Maybe as a father of 6, and I'm used to watching, Dory from Finding Neo. Finding Neo? Neo, the Matrix, always on my mind, right? And Dory's is just like, keep on swimming. Keep on swimming. The Fed's like, keep on printing. Keep on printing. The Year of the Bull. I didn't want to share exactly his thoughts and what he wrote as it was sent to me personally, but he's laying out the case here. The risk, the way he sees it, could potentially and greatly be to the upside. A lot of people right now are focused on getting that Bitcoin at $20,000, $29,000 even. It could happen. You might get filled. There's who knows? You might get filled. But really, do you care? When I stepped in to buy the dip, I told you I'm not timing this technically. I am not trading. I am buying the dip. I am dollar cost averaging in. What's the smarter play? It depends. Yeah, if price breaks down and you get that fill at 29,000, you feel like a hero. You did it. You did good, right? Was it worth it? Is it worth it when you're thinking about the numbers under the current climate that we're looking at? The risk remains to the upside. Now, the momentum's not there. The momentum will be there, in my opinion, once we break out over here to the upside. right? Now that, we don't know, right? We saw a rounding top. We saw an exhaustion take place on the bottom. Well, we're seeing price go sideways. It's not really rounding yet. It's just going sideways, right? But people are getting mentally fatigued. People are capitulating mentally during this period over here because price is going nowhere and fast. And the bears who keep attacking, they're getting eaten up because price is not going in their favor as well, right? So what is happening? Is it possible we get some type of capitulation event? And if that does, obviously that would be massively bullish, and then we would expect to see price rise and rise sharply. If you get a capitulation event, should you be looking, and will we do it together, where is the proper place to attack to the upside? And guess what? As we come into the most important trend line in crypto, we don't know that it breaks. There's no way to know that it's gonna. It could get rejected right there. And by the way, this would be where if you were taking the bearish case, that you would be looking to attack. Your risk to reward at this point becomes very attractive if you're a bear up here into the resistance, right? Just coming back towards the lows, it's very attractive because you could set your risk and you know you're wrong. And there's the possibility that the bears, as we come into that most important trend line in crypto, will mount a counter attack, right? And if they're successful, we'll have to watch what happens. And if they're not, and we break the most important trend line in crypto, at that point, the bulls are on parade. It's time to run, and the bull of all bulls will be running once again. Now, when that happens, I don't know. We're going to watch, and we're going to wait. But I've been very clear since things got unclear, right? And then price dropped down drastically, and I was like, well, things are still unclear. Price started coming up. People wanted to buy. Things are unclear. Things are unclear. Things are unclear. Keep on swimming. Things are unclear. And that's where we are today. And everyone else thinks that they have the full clarity. Some will be right. Some will be wrong. I don't know. I don't have that clarity. Things are unclear. They'll be a lot clearer once we break out over here, right? They'll be a lot clearer if we do capitulate. If we do have some type of did people think that was happening last night as price came off 3%? Right? Did they think that that was that was the chance, that was the opportunity for the bears to attack? Ethereum was looking quite vulnerable. They held the line so far, right? If you're trading Ethereum over here right now, or if I was trading Ethereum, right? Am I highly aggressive looking for a break? I don't know. I don't think this is the time, but there's the possibility that the duration of this bull market, Ethereum continues to lead. I don't know if that happens or not. When it was time to get into Ethereum, I let it be known twice. I would let you know over here on Ethereum US dollar, and I also let you know and like over here on Ethereum Bitcoin. Now the macro bros called it up here. This is when a lot of retail traders also, by the way, when they pivoted or they sold their Bitcoin for Ethereum, right? Under the guidance of the macro bros, right? But this is when we did it, way down over here, right? Is this the time to be? I don't know if Ethereum. If you look at what happened last cycle, and last cycle's just the guide. It's the only guide we have out there in the cryptoverse, right? That's what people are missing. That when you look at the cryptoverse and you're out there in the outer galaxies, that's your map. And the map says at this particular point, right now, you're going to start seeing, and we're getting close. Try to break this down in your head in 60-day periods. From where we are right now through the rest of the 60 days, this continues a slow bleed out. So it would look like this. Let me draw it out for you. It might look like something like this. But then when we come to those last 60 days, right, as Bitcoin starts moving up, like this got wrecked. Before the end of the bull market, when you see the second alt season in action and spike up. It's not the time, in my opinion, to be looking for trades on Ethereum or any other altcoins. Now, listen, a chart's a chart, and if that's where you're focused, then focus on the chart and trade the chart. But be aware of what happened in the past, not because it's going to repeat itself. So far it has. So far it has, right? And when I told you a year ago, when I told you 2 years ago, that what you're going to see happening is Ethereum lead during the bull market phase. When I told you that you will see alt season begin 6 months approximately after the halving event. And then as it occurred in November, December, I was letting you know and then all of a sudden all the experts came out, right? Into the peak of the bull market, all of a sudden everyone was an expert. I had friends that I introduced into Bitcoin, in the summer of 2020 before the bull market broke out. Then all of a sudden become like altcoiners and then like telling me what was happening and what was going on. Anyway, thanks for the time, everyone. Thanks for the time. I'm going to play some Honeymoon over here because I haven't had the opportunity to check out any comments. I want to see what's going on with all of you before we get off here today. I mean, you're looking at, as Tom put it, as we put it, programmable money. It's coded monetary supply. Hold on, David. This is awesome. Bears are crushing it. I've made more money short in Bitcoin than I did longing it. So, I mean, listen. If you said it, it happened. But at the same time, if you made more money, right? If you made more money shorting Bitcoin during a 560% rise than you did during shorting it in a 53% rise, you're doing it wrong. You should have made significantly more money during this period longing Bitcoin than during this period shorting Bitcoin. And David, there's no other way to put it that you're doing it wrong. Period. The end. All right. You've been here for a moment, right? This is right there. Pick up on cadence and tone, signal. Wow, Craig, that's hot right there. That's that beautiful stuff over there. Jordan and the community, thank you to the moderators. Thank you to each and every one of you who contribute with Tom, thank you for your contribution today and always to CTM. Thank you, each and every one of you. Really grateful to share this moment in time with all of you. Have a beautiful day, everyone. Jordan, do you ever get concerned about relying on analysis that uses past performance to to predict future returns. In what market, right? We got a history here, Garg, of crushing of literally crushing all markets, whether it's the S&P 500, right? Whether it was to the downside over here, it's all on tape, and then out to the upside, and it's all on tape. The traditional macro guys, mostly got this very wrong, right? Now, whether you're talking about what's happening this year in 2021 on the Nasdaq, the two corrections and the repairs out of it, absolutely crushing it. The dollar being able to go from a dollar bull to turning bearish on the dollar, right? And then navigating out through over here as we've bottomed out over here. Gold and silver, right? Now, in those markets, I'm not using any type of past performance to give me the future. In oil, how could I not mention oil? Probably one of the greatest things we did over here on this channel together, right? Coming in here, as priced, off that $62,000. This was the day, the night that Iran sent missiles into Iraq, and then all of it crushing it to the downside, ultimately to 1450, getting out, had no idea it was going down to zero, right? Now, in those, none of those markets use past performance. Now, Bitcoin is coded monetary supply, right? Are we using past performance as a guide for the future? Yep, we're no question about it. And then we're throwing in that TA. What do I mean by you throwing in that TA? Well, those that have been following the channel and been following it for the longest, they know and understand this trend line we had over here ever since you guys joined me. And then when it broke out over here and I called the breakout of the bull market and we began trading and I began trading, right? And then when I stopped following the market and price alone. Now, some people think that means that, like, as you come into this little bit of area, that you should be bearish and selling Bitcoin, right? Your view is different than my view. I'm not selling Bitcoin until I get to the top. I don't sell Bitcoin in a bull market. And I said it before the bull market started. And by the way, I also said, there were a few other people who got the bottom with me. There were literally a few other people who got the bottom with me, right? And if you look at anyone else who has got it right for so long, right? They're all with me in their view of the market right now, right? I don't consult or consider, but at the same time, I'm aware of their opinions. Now, you have other people who are like, in 2021, we don't get above 20,000. Don't consult past cycles. All right. 20,000, 40,000, 60,000. Whoa. That's a 3x higher than you said is not going to happen. Oh, then Bitcoin, Bitcoin got hot and heavy, rocket, boom, coming back down a little bit. Oh, look, I was right. 20, come on. Yeah, I consult past cycles and past behavior because it has guided me this far, which is, in my opinion, more accurate than anything else out there. That's why I do it. Yeah. Am I worried about it? Not at all. No. Do I think that the models could break? Yep. I think that the models could break. You're the bull pointing out, listen, under these current conditions, people talking about diminishing returns and talking about, like, the repeating cycle. What happens if the model breaks to the upside? Why is no one talking about that? We got, CTM, by the way, Ted, thank you so much here for this enormous contribution. This is going to be, like, we're going to be referring to this so often in the future. It's just not the time right now. We're waiting until we break this line over here. We'll wait until we break the most important trend line in crypto. Ian, thank you for all of your hard work and contribution to making this happen. So grateful for it. CTM modeling, right? Well, we got, Tom is like, there's a lot of variables. Yes, there are. No question about that, right? Look, I'm not saying that this is going to peak where we currently have what we're looking for the peak of the market to be. And look, we have a pretty tight range of where we expect it to be, but there's variables, right? Is it still possible Bitcoin trades this cycle past $1 million, right? Raul Powell, who's, hey, listen, the past is the past. If you look at this current bull market cycle, Raul has been spot on. He was spot on before it happened, right? Forget the pivot to Ethereum. That was late. Call it as it is. But he also said the whole time, he said, listen, expect at least a 50% correction, right, during the bull market phase. Well, he was spot on because we had a 53% correction. I was off. I only thought, hey, listen, I don't think we're going to have more than a 40% correction, right? I was off. We had a 53% correction so far, and it's not done. It could go further. Who knows? We don't know, right? It could go down to $20,000 and test the previous all-time high. Yeah, that it could happen. Is it probable? I don't know about that. I don't know if I wouldn't say that's probable. It's possible. As we come up over here, though, right? Our range is pretty high, right? Is the range also low? Yeah. If we see diminishing returns, right? Diminishing returns, by the way, right? The first thing I did during that bear market is work out my price target using past cycles to get some type of awareness of what I was looking at. And I used diminishing returns to get there. It's how I did it. Yeah. And, this was back
before you get
this one's February 15th, 2020. Only 5,000 people got to see it. Hey, if it got 50,000 views, 10 times the amount of people would have had the opportunity to understand what was going on and set their goals accordingly. But it's something that was been repeated over and over and over for not only several months, for about a year. Yeah, it's within the model if we see some type of diminishing returns, and guess what? I hope that we get the opportunity to hit 140, mission accomplished. Is it possible we don't? Anything's possible. It's the markets. You're looking for probabilities and you're looking to manage your risk around this. All right, everyone. That's it. I'm going to cut it short over here. Thanks for spending the morning with me. Thanks for putting in the time, for putting in the hard work. If you're still watching this right now and haven't yet, smash that like button. Go ahead and on the way out here, smash it like it's hot. No. We're going to hear that one more time. So when are we gonna take out that all-time high? $64,500. I have no idea, but I do believe that as we break the most important trend line in crypto, from then it will unravel pretty quickly. That's what I believe. That from the moment that we break and have a breakout of the most important trend line in crypto, the time from then until the new all-time highs will be relatively soon. All right, everyone. We'll do it again tomorrow. Thanks for the time. Have a beautiful day, everyone. Thanks for making mine as such. I'll talk to you soon. May God bless you.